Hey, good morning, everyone. This is your market update for Thursday, November 3rd. So wild and crazy ride yesterday, initially at the culmination of the Fed meeting. Some comments that were made initially indicated, or the market took it as, that the Fed was in fact, potentially going to entertain a less aggressive stance moving forward that would potentially include smaller rate hikes and potentially a pause at some point in time sooner than later. Unfortunately, shortly thereafter, at the press conference that took place, Jerome Powell kind of expounded upon those initial comments and indicated that while smaller rate hikes were likely moving forward, that they still had a long way to go in their fight on inflation, and that they would rather overshoot than undershoot the actions that they're taking. So initially, before those comments were made by Jerome Powell, both the stock market and the bond market rallied pretty hard. I think the stock market at one point in time was up on the Dow over 400 points. Mortgage-backed securities rallied from being up only a few basis points to, I think, up over 40 to 50 basis points. However, when Jerome Powell made those comments after the culmination of the meeting and the initial Fed response, the market sold off hard, both in the stock market and the bond market. Stock market ended up down several hundred points on the Dow, I believe, and that's kind of carried over into today as well. Initially, the futures indicated that stock market would open up down over 200 points, which it did on the Dow, NASDAQ, and S&P 500 down as well. However, since then, stock market's rallied back a little bit, still negative on the day, but I think the last I checked a few moments ago was down 89 points on the Dow. Bond market opened up today down over 50 points as well, but has since then rallied back and is off of its worst levels of the day pretty significantly. I think down only 12 basis points last I looked. So, 35, 36 basis points higher than where it opened earlier today. Which I think is in anticipation of the jobs, the employment numbers that are slated to come out tomorrow. If those numbers, in fact, show that employment creation, new jobs numbers are lower than expected, then that could support a tightening in the job market and could give the Fed cause for moving less aggressively moving forward, and also potentially stopping rate hikes earlier than anticipated. So I think at this point in time, the markets are heavily anticipating those jobs numbers to come out tomorrow and hoping for a number that's lower than expected. So we'll keep you updated. And also the Freddie Mac published rates haven't come out yet as of today, but I will update you on those tomorrow to give you an idea of what the movement week over week is. So hope everybody has a great afternoon and a great remainder of your day, and I will see you tomorrow morning.